Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those crazy corporate filings. Today we're diving into INNOSPEC's latest 10K report. This one's a bit of a mixed bag, like a surprise grab bag you find in your grandma's closet, some good, some not so good, and some downright puzzling. Let's start with the overview. INNOSPEC, if you haven't heard of them, makes specialty chemicals. Think additives that make your fuel better or ingredients in your shampoo. They operate in three main areas: performance chemicals, fuel specialties, and oilfield services. In 2024, things were looking pretty good in the chemical and fuel departments, but the oilfield side took a bit of a tumble. Let's look closer. Performance chemicals, the division making ingredients for everything from your face cream to construction materials, saw a revenue jump of 16% and their profits increased by 52%. They bought a company called QGP Quimica Gerald, which is helping them grow in South America. Basically, they're selling more stuff and making more money doing it. Fuel specialties, the guys who make your gas more efficient, had a smaller but still positive year. Revenues increased by 1% and their profits went up 18%. They're working on technologies to make fuels cleaner, lower emissions, and improve efficiency, not just for traditional fuels, but also renewable and non-fuel applications. Think of this as making your car run cleaner and smoother. Now for the not so great news, oilfield services, which provides chemicals for drilling and production, had a rough year with revenues down 29% and profits falling by 51%. The company has a big customer in Latin America, but business in that region has slowed down. However, even with that big customer's issues, the core oilfield business actually grew. Of course, there are always risks. Fluctuations in raw material costs like oleochemicals and solvents can squeeze their profits if they can't pass those costs on to customers. They source key raw materials from multiple sources and have contingency plans in place, but you can never completely eliminate the risk. Because INNOSPEC operates all over the world, including in places with unstable governments, they have to deal with risks like getting their stuff stolen, import restrictions, and making sure they follow international commercial laws like the US Foreign Corrupt Practices Act and UK Bribery Act. Violating those laws can result in criminal or civil penalties. Here's an interesting one. Sales of their Avgas product line are at risk. Avgas is used in small aircraft and it contains lead. There's a global effort to eliminate lead fuel in aviation, with the FAA in the US aiming to do so by 2030. The European Union is proposing a ban even earlier. There is no available alternative. If lead fuel is banned, a big chunk of INNOSPEC's business will disappear, so the company is looking at potential alternatives to lead fuel. Like all of us, INNOSPEC uses a lot of computers and are exposed to unauthorized or fraudulent access. INNOSPEC must protect themselves from physical and electronic break-ins, cyber attacks from state actors, terrorists, or organized crime. They've strategically integrated cybersecurity risk management into their risk management framework. The IT leadership team is responsible for assessing, identifying, and managing the risks associated with cybersecurity threats. They periodically engage specialist security contractors to test the company's resilience to cybersecurity threats. The CEO and CFO are involved with and approve the company's strategy for managing the prevention, detection, mitigation, and remediation of cybersecurity incidents. The board of directors also has a role to play. Since 2019, they have retained NCC Group to perform cybersecurity reviews. NCC reports its findings directly to the board. Also, in their business risk overview, they noted that one customer accounted for a large part of their business. Their principal customers are personal and home care companies, oil refiners, oil and gas exploration and production companies, and other chemical and industrial companies. The loss of a significant customer, a material reduction in demand by a significant customer, or termination or non-renewal of a significant customer contract could adversely impact results. Speaking of risk, let's talk about what the company is actually doing. As reported in the last filing in 2023, the company incurred financial losses and lodged a civil and criminal legal claim related to a misappropriation of inventory in Brazil. On the environment side, the company recognizes that some manufacturing sites may require safely decommissioning and environmental remediation. Looking to finances now, INNOSPEC has a credit line with a syndicate of banks. The credit line contains restrictive clauses which may limit the company's activities and operational and financial flexibility. It was recently extended to 2028. One more financial aspect to consider: MEADS, the Organization for Economic Cooperation and Development, OUCD, released Pillar 2 Global Anti-Base Erosion Model Rules, Pillar 2 rules, designed to ensure large corporations are taxed at a minimum rate of 15% in all countries of operation. While the US has not enacted legislation implementing Pillar 2 rules, other countries where INNOSPEC does business, including the UK, have enacted legislation implementing Pillar 2 rules, which came into effect from January 1st, 2024. They highlight human capital and employee engagement. The company has invested in human capital management. Their approach requires investing in talent development, culture, and employee engagement. They are encouraging to make positive contributions and fulfill their potential. There are objectives such as no one gets hurt, we don't negatively impact our neighbors, we leave only the gentlest footprints on our environment. The company includes reports that were independently assured to assess its adherence to the globally recognized AA 1000 assurance standard. Further information on our human capital management initiatives is available online in the company's website. Now, as for the people in charge, not much has changed in terms of directors and executives, so all this boils down to one thing: a company trying to navigate a changing world while keeping its operations running smoothly and profitably. So, what's my take on INNOSPEC? Well, it's a company with solid footing in some areas, but definitely facing headwinds in others. Performance chemicals and fuel specialties are providing the stability, and the Latin America oil fields are the wild card in terms of growth. One potential issue is that 45% of their stock is controlled by 4 stockholders. If one of them wants to sell their holdings, it could negatively impact their ability to access equity markets. This could adversely impact the results of operations, financial position, and cash flows. Another factor is that the company's bylaws designate specific courts in Delaware as the exclusive forum for certain lawsuits by stockholders. This could make it harder for stockholders to sue the company. Based on what we've seen in the report, the long-term success of the company will rely on them navigating the revolving credit facility they are on to incur additional indebtedness and otherwise expand business. But back to the data, oilfield services have a favorable sales mix and the benefit of improved pricing, but that wasn't enough to have an impactful year. Their outlook for 2025 still shows optimism, though the Latin America market is showing headwinds. Overall, INNOSPEC is a company in transition. They are making solid bets on what they view to be a strong future for the company and continue to have flexibility and balance sheet strength for further M&A, dividend growth, share repurchases, and organic investment. Given their mixed performance and considering a price to earnings ratio of around 15, a reasonable price range for INNOSPEC stock is between $100 and $110. So my recommendation would be slightly bullish or more neutral than bearish. Thanks for watching Corporate Decoder. If you found our analysis insightful, don't forget to like and subscribe for more deep dives into the corporate world.